said we can't talk about insurance again, but I've got to do it. We have to talk about this. Yesterday we told you that you would pay for the sins of my state of California in your insurance. Everybody's going to. It's mismanagement on a Benny Hill scale. It's like a 70-year-old in a candy shop with mom's ATM. And our elected officials, all of them, they're just out of control. And this is just the beginning. Are you ready? Bay Area homeowners will likely be on the hook for helping bail out California's insurer of last resort to the tune of $1 billion after it ran out of money to pay claims for the devastating Los Angeles wildfires.
State regulators announced this week that they will allow the program known as the FAIR Plan to collect emergency payments from private insurers who are expected to pass a significant portion of those costs on to policyholders statewide.
It was not immediately clear how much homeowners would have to pay, which homeowners would be charged, when they would see a new cost on their premiums, or how long the increase is going to last. Increases never go away, by the way.
The amount each insurance company must pay will be based on its market share in California. Get this and listen closely. Under state law, insurers can only charge their customers up to half of the $1 billion assessed.
So the California insurance plan went defunct, which was to replace the private insurance, which they ran out of the state. Now the state, who is defunct, is going back to the private sector and asking them to raise money on their behalf to bail the state out. It's another tax by another name, all from mismanagement. And if you think this is going to stop at the border, you are out of your freaking mind. Mark my word, the insurance companies are not going to stop at our state lines on these rate hikes. Absolutely not. No chance at all. It's coming to a theater near you. Just like last time with our energy costs in California going up for everybody to cover the cost of those fires, now insurance for all to cover the cost for the privileged few. I'm telling you, government has never met a cost raise they didn't like. Side note, the next time you get a tax hike proposition to improve the schools, fix the roads, help the homeless, or safeguard the prisons, vote no. Not because you're against these issues, but they can't balance the damn checkbook. Anyways, moving on. I'm going to read you an email that we received from a loan officer regarding UWM's new operating system for loan officers known as FAIR. Do you agree or do you disagree?
Directly from the email we received, basically what it says below is that UWM has created its own application and operating system for brokers to use. An applicant directly applies to UWM through the broker's own UWM link and uploads all their needed documents directly to UWM. I think UWM is marketing it as a time saver for the loan officer, but it opens up the individual brokerage for future liability. One of the problems is this. Let's say a brokerage decides to no longer use UWM. Then they have to go through the state audit. That brokerage does not have access to any loan information of past loans closed through UWM. Additionally, if the client directly applies through UWM, the loan officer may lose their right to have that client in their CRM since UWM has their own internal LOs. I also envision that it may require a broker to use this new system if they want to do business with UWM, which may force a brokerage to only use UWM.
They go on to bring up some more points, but that should suffice. Look, UWM is certainly looking to provide value to loan officers. I get it. Nobody argues about their systems. They're great. The question some loan officers have is the motive behind some of their moves. Is it truly in the loan officer's best interest? Because let's face it, they have given the industry opportunity to second guess their motives simply from the number of lawsuits that they filed against brokers. It's a big list and nobody's even close. Is this a way to pigeonhole you into using UWM? After all, Matt Ishman said more than once he wants all your loans to many a loan officer to not only give you the leads they close with them, but access to the ones that you don't close with them. And what punitive action will you face then? Is this nefarious, or is it just a great, astute offering from a mortgage company who's doing things better than others? Let us know what you think down below. And please, I'm very curious. Let us know what you think down below and make sure you share this with other loan officers so we can get a great sample size of how the mortgage brokerage industry feels about what's taking place with those guys. Hope this helps. Well, there's no longer denying it. We're going to get back to the basics. And I do say basics. Talking about effective video marketing to your clients. Everybody's doing it and it works. I've been at this longer than anybody, 20 years in video mortgage marketing, video real estate marketing. If you want to learn, fill out the information down below at 11 o'clock this upcoming Wednesday, 11 o'clock this upcoming Wednesday, Pacific Standard Time. That's what we're going to be doing.